Good afternoon, esteemed traders and investors. Today is Monday, February 9th. I present to your attention another market review for InstaForex. As always, I'm glad to be here with you today. Let's start with the news for the week. I've highlighted the important news. I've already filtered them out. They will start from Tuesday. The core retail sales index and the volume of retail sales in the United States, still without Iran, will be released tomorrow, that is, on Wednesday. We have changes in the number of people employed in the non-agricultural sector and unemployment, which is interesting. The world is changing. Now we have non-farm payrolls on Wednesdays. The week of February 11th is going to be an eventful one. On Thursday, we have the GDP for the pound and initial jobless claims in the United States, still without Greenland, in the States of America, and on Friday we have a very busy inflation report for the dollar. It's a news-packed week. Let's see what we can trade on the charts. So, let's start with gold analysis. Gold is in a very interesting situation on the weekly time frame. There's a bearish pin bar at the highs and a bullish pin bar also at the highs. And this specific pin bar has a clear top, a precise penny, and a set price for the protective stops of the various sellers who placed their limit orders right there. Because of this, the pin bar is very strong, high quality, and is extremely likely to break above the high of the last trading week. On one hand, there's uncertainty, a pin bar at the top, a pin bar at the bottom, but the lower one is within the framework of a bullish trend. That is what we could call its main foundation, much more so than the bearish one. In any case, right here, of course, we should definitely be looking at a potential upward move. I actually mentioned this possibility last week. By the way, please note that on the 4-hour time frame, our long elephant pattern worked out quite clearly, and now the instrument is steadily rising. So, considering all of this, what exactly can be done here in this situation? If we get good prices for buying from the last long initiative at the end of last week, we can work with long positions. On the 15-minute chart, this looks a bit higher overall. Ideally, of course, I was waiting for this test, but it happened during the Asian session, and they didn't give us a test of the lower long break. There is also a somewhat higher price zone right here, which you can also try to buy if they let you. That's about it. Right now, the instrument is in the short break zone, so it's logical that a correction is happening, but it's just a matter of time because this zone has already been tested many times, and that's definitely pressure. So, this was the first test, now the second, third, fourth, eventually it will break through. The question is whether they'll give a good entry price or not.
Looking for real trading advantages? InstaForex offers the lowest spreads and commissions. On major currency pairs, our conditions are better. Lower spreads and only $5 commission instead of $7. That's real savings for every trader. And now, let's get back to the market review.
The Euro-US dollar pair last trading week was concluding its session with highly comparable patterns just as we see with gold, because fundamentally there's a general downward trend of the US dollar across all instruments, including gold. So, last trading week. This pin bar also demonstrates a clear correlation with gold, and while it is not an exceptionally strong or definitive signal, it fits perfectly within the overall bullish trend. It makes sense that the instrument is experiencing a steady upward movement right now, at least to retest the highs of the last trading week. Looking at the 4-hour time frame, we can see that we have some very solid and consistent momentum building up. As I mentioned before, there is a strong assumption that the bullish impulse we witnessed 2 or 3 weeks ago, that specific breakout, could be the key initiative that leads to a continuation of this impulse. So, we are looking at the initial impulse followed by a brief pullback and then the eventual third wave. This looks logical within the framework of this 3-wave structure. The first resistance on the instrument's upward path will be the area of the technical short breakdown, which is located here. At the very least, it is perfectly reasonable to consider buying up to that specific level. This week, the instrument has already provided us with a very clear and distinct signal for this entire process. But I must remind you once again, this current trading week is extremely news-heavy, and absolutely anything can happen from the buyer's perspective. Now, where would be the ideal entry? The best possible option to buy in, of course, and this already actually happened for us this past Friday. Yes, specifically during the busy European session. I was very closely watching for that bullish reversal, but there was also a slight miss. On the American session, we almost tested this zone on Friday, but not quite. I really wanted to buy from right there, but they just didn't let us. They did not let us. And the line that I have marked here is the high of this past week. So it's logical that it would be broken. Therefore, it makes sense to look specifically for buying opportunities. If we get good prices, we should definitely consider going long, aiming to update the highs of the current and previous week, unless all of this gets broken earlier. So, with these incredibly competitive prices and such strong long-term growth potential, we simply need to be patient and wait until we finally get exactly what we are looking for in this market.
I also want to remind you that every InstaForex client automatically receives loss insurance. For every $1 of compensation, only $4 of your friend's investments are required. Just submit a request, and your losses will be recovered. Let's continue with the review.
The pound-dollar pair on the weekly time frame is absolutely mirroring the euro, only with slightly higher volatility. In this case as well, we have a continuation chart pattern, but with last week's trading, there is certainly a bit of uncertainty at these recent highs. But in such patterns, it's better to follow the trend, meaning the focus should be not on the upper, but on the lower bar. When we examine the 4-hour time frame, the situation is very similar to the euro-dollar. Here too, we are seeing a clear breakout. A corrective pullback to test the long break on the 4-hour chart did not happen, as it fell just a bit short, and instead, a reversal occurred on Friday, driven by a strong bullish impulse. From a technical standpoint, I do not see anything particularly interesting or noteworthy here for the time being. Furthermore, it is important to note that the short break zone is currently positioned much higher than the long break zone within this specific area of the chart. In other words, the instrument is between them, so it's not particularly interesting to us here. The performance of the Australian dollar was quite pleasing to see last week. It initially went for a new weekly low and then was quickly bought back up. This is definitely a clear continuation pattern of the current trend, so it is certainly worth paying close attention right here. Of course, the instrument broke out to the longs and it moved into those long positions very sharply indeed. Also, during the Asian session, all the Asian currencies are clearly in control and there were no long breakouts here. The instrument simply grew and all the targets are the same as for the euro and the pound. It's the same weekly range, but again, buying at such a high price isn't really the right move. We need to wait for significantly higher price levels, and there is currently a lack of any clear or obvious breakouts, meaning the instrument has just stretched out, so we're not touching it for now.
With InstaForex, you can triple your profit. For every $4 of your friend's investments, you automatically get an extra $1 added to your profit, with no extra conditions.
Looking at the dollar-Canadian pair, the dollar to Canadian dollar on the weekly time frame showed signs of upward growth last week, but for the strong sell-offs we are expecting, we really need prices to go much higher to ensure that we are not taking risks with the current price action. So far they're not giving us good ones, but the potential for a decline remains on the weekly time frame, but there are no real entry points yet. Apart from the last short breakdown, there hasn't been anything here yet, so we're waiting for better prices to sell. As for the dollar yen at the open, once again, it retested the short breakdown on the 4-hour time frame. By the way, it's clearly visible. The price moved up. So, the idea of a decline for this instrument within the larger three-wave structure still remains valid. On the weekly time frame, last week closed bullish and tested the short breakdown zone. This is clearly visible on the 4-hour chart. If it doesn't reverse from here, then, on a new high, it's better to close your short positions. The Asians reacted quite clearly. In fact, it was the Asians who initiated this downward move during the Bank of Japan's press conference. And they are also reacting to this zone. Now, on the retest from below, there's nothing particularly interesting here yet. If you get caught in shorts, then hold at least until the long breakdown zone, around 154.
We also have a great offer. Fund your account and get a 30% tradable bonus. Trade with additional capital and expand your opportunities with InstaForex.
Now, as for the current price of crude oil, please notice how, on the 4-hour time frame chart, it bounces very clearly and consistently off the long breakdown zone. Well, basically, just as significant international military forces are building up right now in the Persian Gulf region, the instrument is reacting in much the same way. In other words, our attempt to reach an agreement led to nothing. Impulse, pullback, test. And I hope that all this will lead to a further powerful growth of this instrument at the first signs of military action. The idea here is very simple. Let me show it on a separate time frame as well. This is the break of this short trend. Impulse, pullback, and a suggestion of growth. And I believe that all this sluggish movement below these highs, which at the time were not taken out in the area, and 90 and 80 and 70, all of that should be taken out somehow. This is the weekly time frame. There is definitely a reaction to the long break zone at the beginning of last week. And here, of course, it's better to only work on the upside. Friends, InstaForex offers a free consultation with a personal trading consultant. Follow the link in the video description, fill out the callback form, and gain access to exclusive offers and special trading conditions, BRT Plus, for risk-free trading. That's all. Trade with InstaForex, subscribe to the channel, and stay tuned for new reviews.